Three, two, one. What's up, everybody, and welcome to another episode of Business and Biceps. And you better wake your ass up, because on today's show, came out, the unemployment rate is actually not as high as we expected. The stock market's on fire. Businesses are, I think optimistic, Fosco, and this 100%. Is business and fucking biceps.
It is.
And this is what we talk about.
The biceps are on this side of the screen.
Oh, okay. There's a little baby bicep right there, Johnny.
No, you're absolutely right. I think so we got an unemployment rate put out at 13.2%, and all economists, everybody in the financial sector was saying that this is going to be the worst unemployment rate we've ever seen since the Great Depression. People were expecting it to be between 20 and 25%, and it came out at 13.2%. So when you think about our economy, people's jobs, their livelihood, the stock market, we have finally just gotten, since the pandemic has started, some good news. And it's not just good news, it's really fucking good news. We're talking, 7% to 12% better. That's a huge number. That means people are getting back employed again. Servers are getting their jobs back. Everyone is getting their jobs back. So everyone was debating, is this going to be a U-shaped recovery, meaning a slower recovery, or a V-shaped recovery? But when you see a number like 13.2% and all signs point to it only dropping from here, it looks like we may have a quicker recovery, hence lighting the markets on fire.
Yeah, I was like the pre-market stuff I was looking at, like, holy shit, like stuff was up like 25%, 18%. Yeah. I was like, and that's the thing that everyone, as a business person, as an investor, you see an opportunity like this, and if you're aggressive and get involved, and then when you see a jump like that, which I've never experienced before. In 2008, when we had a market crash, I was not involved in the stock market at all. I didn't know as much about the market, obviously, as I do now, and so I didn't partake in that, which was more of a right? That took many years, John, to come back from what they lost in 2008.
Because it took like 2 years.
Yeah. So where this one might be obviously looks like a much faster turnaround. So yeah, to participate in that a little bit's been pretty amazing. But you never know, right? So it's just like, it's good today. It could be red tomorrow. That's kind of what happens.
Yeah. But I think, more than anything, when you have a dip and the economy is dealing with things like the pandemic and civil unrest, and you expect the dip to keep going down, and it suddenly, to the shock of everybody, drops, the percentage drops, meaning, there's more jobs are more bountiful and plentiful than they were a month ago. That's a sign that this country is getting back on its feet. Consumers will be putting money back into the economy. Businesses will have the fuel they need to not only stay in business, but grow. And for investors out there, it's literally like the green light. So if you're eyeing any equities, any stocks that are beat down simply because of this whole situation, that's why I think pre-market and during the market, it's up so much today, because you just got the green light, because things are going up. And it's only rational thought to think that June's unemployment report, which will release at the beginning of July, is just going to be better.
Yeah. And I was thinking about this, about the unemployment level, and, my dad was on strike for it was like 2 or 3 years off and on with the coal mine. And I remember my grandpa wasn't really building houses then, because he was in construction, and, all my uncles and aunts and everybody that had labor stuff and worked in offices, like how just, I don't remember us ever really, or them going to, get either welfare, or my mom should have got welfare and should have got food stamps 100%. And I don't know if she was too proud to do it or what, but I've told her, I think we would have ate better if you would have got that, Ma. Like, she was just, scrimping by. But I was thinking about that during this, or even early in my first business. 2005, 2006, if all this was going on and none of my clients could have came to the gym. Like, obviously we've both been in business for a really long time. There's a ton of challenges currently, and there will be in the future. But I really wasn't out of touch, I don't feel like, with what could have happened during this exact time. Honestly, if it had just been a different part of my life, whether it was when I was young or younger in business, it would have been dramatic. My experience would have been dramatically different, Fosco.
Yeah, I mean, I think everybody's is. I think people who don't have established careers, people who are coming out of college, this is a extremely devastating time, because not only are people losing their jobs, but if you're fresh out, ready to enter the workforce,
Yeah.
and the workforce is just being cut, you're walking into a brutal situation, and you have to eat, you have to put a roof over your head, and this stuff isn't easy, but this is good news for everybody,
Yeah.
because as job creators, right, like, this is an indicator to us. Consumer spending increases, we can expand operations can expand, you can hire more people, you're paying more taxes to local municipalities and the Fed. So obviously we can get out of debt as a country, and Lord knows states need the relief right now as well. So this was a really good day for everybody. And I think, 5 years ago, I wouldn't be able to understand why necessarily. I'd see that
Yeah.
number and I would just be like, oh, that's good. Okay.
Yeah.
But there is a domino effect, and it starts with liquidity being pumped into the consumer market.
Yeah. I mean, my last kind of like random thought that I had just about, people being able to return to work or being off strike or off like furlough, whatever it would be like,
Sure.
the difference in like my household, one of the like most distinct moments, I remember when my old man was on strike, or whenever he was laid off, I think is the word I'm looking for, is like heating our kitchen or like heating our house with the only thing that still was on. So like that's the difference between him being laid off, meaning like my mom had our stove open straight up because the electric was still on, but we didn't have no money for the gas. They used to have a heater oil was what we ran our house on, right? And it's like the difference in, him waiting to get his paycheck and then being able to then actually have the heat, like then he could also put into his investment. Then he could be able to go spend more. Like it stimulates so much, which is why because then your whole spending habits restart again, which restarts the economy. So I tried to really do a good job or attempt to really put myself in those positions so I could, not
Absolutely.
be completely unaware of, because my situation is different. I
Yeah,
don't
bro.
know.
Listen, when I was one of the hardest things I dealt with was, it's well documented, kind of my childhood on this podcast. After my parents got divorced, I was living with my mom, and that's where I wanted to be. And she had to sit me and my brother down and say, "You can't live here anymore. Not because I don't love you, but I can't afford to put food on the table, and I can't afford to pay for a place that has 2 bedrooms." So we had to go live with my dad. So that's, everybody feels this stuff.
Yeah.
You work your balls off, so you put yourself and the ones you love and all that stuff in positions where hopefully you don't have to deal with that.
Yeah.
But there's a lot of struggle behind these unemployment numbers. And when we see good news, it's not just good news for Wall Street. This is good news for everybody.
Yeah.
This means the we're hiring, bulletin is going out on, hiring websites and small businesses and all that stuff.
Yeah.
So it's a good day.
Amazon was hiring some astronomical amount of people. Like, so there's an Amazon distribution center right beside my gym, like literally like not even maybe a quarter mile. And it looks like a mall. First off, the building's like 1 million square feet, literally.
Yeah, right.
And then there is not one parking spot, John. I mean, there is not one parking spot in this place. I took AG by there the other day, and he was like, "Dad, I want to see the Amazon." I'm like, "Well, it's just some big ass building." He's like, I can't believe how many fucking, no, he didn't say fucking, but how many cars are there? I
Right.
mean, it's staggering to think that they're able to offer this many jobs during this time frame is actually staggering.
Yeah, I mean, with the pandemic, at least, people staying home. I mean, Amazon is they're a benefactor of the stay at home. I don't want to leave the house. The whole quarantine deal, and it looks like they're maintaining those jobs that they added um, as things slowly but surely return to normalcy.
Mm-hmm.
So I believe they added 150,000
Yeah.
jobs, which is fantastic.
Yeah, unbelievable. Hey, so on the stock tip for a second, I
Yeah.
know you're like a Shopify expert, kind of, and I
Yeah.
bought some Shopify. Shopify's during this has got kind of beat up though a little bit. Do you know why?
So Shopify, okay, so I kind of know
Yeah.
why. So when you look at the fundamentals of it, when you look at the business model, when you look at nothing's changed. So an article came out like the day me and you talked, the day we both bought it.
Yep.
I'm like, it's being shorted right now.
Oh, okay.
It's being shorted right now, and it went down. And I think I don't know where we bought it that same day.
Yeah, I bought it like around. It was like 729 or something like
Yeah,
that.
and then it went up to like almost 775 or something like that,
Yep.
and then it's coming back down because there's always a narrative. There's always a narrative when a stock is hot as Shopify has been for 3 years. There's
Yep.
always a narrative from hedge funds and Wall Street that, oh my God, it's way too high. It's above the. They want to short it because they know if you're a bank, if you're JP Morgan Chase and you put out something that says Shopify is way overpriced, you're going to move it down. Well,
Yep.
well, you're going to short it that day. And then when it moves down, because the fundamentals of the company based on all the earnings reports are so good, you're going to buy it. So you're going to make money on the way down, and then you're going to make money on the
On the
way
way
up.
up. Gotcha.
So Shopify is probably the best suited company for what's going on right now. And
Yes.
I absolutely buy on dips. And just so you know, with American Airlines, the reason American Airlines exploded up, I was talking
And
to
it
Jay,
exploded.
I was, yeah, I was talking to Jay earlier, is because there was a short squeeze on it. So it wasn't because it just went up. It's because motherfuckers were shorting the stock. And what happens is when it starts going up, let's say 3%, 4%, they just keep losing money. So they need to
Buy it.
buy it to
They have to
cover their.
cover it. Yeah.
So it's called a short squeeze, and that's why it runs up so fast.
Explain that, John, because I think, even though I've followed stock a lot, especially heavy, like an actual shorting a stock in a squeeze, explain that like kind of top to bottom, like how you can actually
So
buy a
yeah,
stock that's going to go, you want it to go down. People probably don't
yes.
really understand that.
So I just for the record, I've never shorted a stock in my life. I have a decent understanding of how it works,
Sure.
and to my understanding is, let's say American Airlines is at $9. Let's say you take a I don't want to call it a bet, but you take a bet that it's gonna you short it that it's gonna go to $7. Okay. What happens is if you make that bet wrong and it goes to 11 to 12 to 13 and it runs up, that's called a short squeeze because there's so many people pulling back on it, but the winds of the market are taking it the other way. They're losing money on that gap
Spread.
between
Yeah.
7 and 12. Oh, 12 just turned into 13. So I'm losing $6 a share, $7 a share, 8. Okay, shit, I got to cover this motherfucker. So I better buy now because this short squeeze is running wild. So the people who are pushing up a lot of the price are the people who shorted it. So basically that's why it keeps going up, because they're losing so much money because they made a big bet and they were wrong.
And so if it goes to 7, though, to your point, if it's, let's say, $10 and you short it at 7, you make the difference on the cover,
Correct.
right?
Correct.
So you could make, if you had 1,000 shares at $10 and you bet that it was going to go to 7, you made $3,000 and never held the stock.
Correct.
An actual share of the stock.
Correct.
I don't even know why they allow this to be legal.
Oh, Corey, there are instruments. So dude, futures are a whole different deal. Credit default swaps. There are so many financial instruments that are all they are is Las Vegas tools to gamble. You know what
Yeah.
I'm saying? So, when you talk about financial regulation and all this stuff, they're so detailed that the retail investor, unless you are very, very schooled in this stuff, it goes over your head.
It's impossible, bro. And I think that's what messes up, like, growing up the way that we both did with not very much money, then trying to close that gap to understanding, like, even like basic to mid-level financial instruments. It's so fucking like, unless somebody's teaching this, like, family after family, like,
Sure.
it's tough to kind of close that gap, bro. And then I feel like I have a solid understanding, but then there's three or four or nine levels higher. That's like, there's so many motherfuckers manipulating this thing so many different ways, man.
Yeah.
It's actually staggering.
Well, and where it gets dangerous is if you look at, the previous crash, credit default swaps, which were
Yep.
basically like mortgages that, Citibank bundles up. Oh, I'll sell you fucking 10,000 of our mortgages, and they're essentially like, they know they're going to default, but I'll discount it to you. And it's like betting, is this person going to default on their loan, or are they going to pay it? And then what happens is like I said, it turns into a casino, and everybody gets hurt, right?
Yeah.
And then banks get bailed out and companies get bailed out, and there's a lot of anger there, right? Because when you're a private business, like,
You're not getting bailed out.
but that, like, the airlines did, the airlines got bailed out, and
Big
it's
time.
yeah, it's just listen, it's, some people could say it's not fair, some people could say it's fair. I think if you are a business, you need to be able to stand on your own 2 feet, free of bailout, and prepare for the worst at all times.
It's
Um,
really not a fundamental business when you get basically a bailout card.
Well, yeah, I mean, it's not you if you're running your business tightly, you should never be in need of $5 billion. Like, you know what I'm saying? Like, oh, I need 5 billion. Like,
Throw me
what
just 3.2
the
over here.
fuck? Like, what the fuck? Like, what? Um, so yeah, that's that. But the little guy will never see that. Little guy's never in that conversation.
No.
It's always the argument that we're such a big business. If you took us away, the consumer suffers.
Yeah.
And I don't agree with that, because if we're talking about airlines, trust me, there will be someone who comes out with a new airline company and says, "Hey,
Yeah.
what we're going to do is lower airline prices. So that's how we're going to get business, because you guys have essentially put together a cartel of airlines
Yeah.
that price gouges people, because they talk to each other. They're an alliance, and they won't go below a certain price. So the consumer loses, right?
Yeah. Well, think about this too, John. In that business, JetBlue or Spirit or somebody like that can never, not, let's say never, but they have less of an opportunity to be the next United or American, because essentially those companies are being propped up even when they fucked up. So how does the little guy then say, okay, boom, now I'm in this position? You just see what I'm saying? That messes up that kind of how normal business, just how we were back at MP. BSN was ahead of us, and we pushed and pushed and pushed because we wanted the top guy's spot. I would think, like, in a business like that, when the government keeps bailing you out, like, how can the little guy come through when the big guy just keeps getting love? I mean, that's right. That makes sense.
Yeah, I mean,
It doesn't make sense, but
well, it makes sense, because the truth of it, which is not a fair truth, but it's the truth, is that these monster institutions, these monster businesses, they have monster capital, and
yeah,
monster capital talks. Capital makes rules, right or wrong. That's the system we live in. So that's why that stuff happens. But I'm a believer in, like, nature has to take its course. Things have to reset. And if you can't make it based on conditions, then you can't make it. As a business owner, you have to prepare for, bad things.
yeah, for sure. Um, will you, let's say, John, from a stock standpoint, and this is kind of what I've been going back and forth with right now. If there's some gains that have come from an American Airlines, like I bought American Airlines really cheap and hopefully it does well. It's like, is there
Sell the fuck out of it.
yeah, and then move it into like an old dog that you just sit on for a long time, or will you keep just going next opportunity, you know what I'm saying? Like if you have a big gain on something, let's say it doubles or triples, which these have opportunities to do, especially in the current situation. It's like my idea was because I'm mostly actually pretty reserved in my investment. I was pretty aggressive during this time. It's paying
Sure.
off for me. So
Right.
now it's like grab those gains and go, okay, I'm gonna just sit on making this up. McDonald's because it pays a 3% dividend and it ain't going nowhere. You know what I'm saying? Like more of like a long play,
Yeah.
or is it like now what's the next runner? Like
Yeah.
do
I
you
mean,
keep is that how you
I
do it?
Yeah, I mean, how I would do it is say, okay, why is American Airlines doing what it's doing? There was a short squeeze. Is it going to pull back before it
Already
accelerates?
pulling back,
Correct. So, American, if you know something jumped 70% in the last 2 days, and
which is literally what it did.
correct, 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 and it's because there was a short squeeze on it.
Yeah.
Take your damn money.
Yeah.
Because you can always buy it back. Take your damn money and put it in a place where it's more stable. Like the airlines, yeah, man, I think they're gonna come back, but like there's still uncertainty in the air, and you just saw a 70% bang.
Yeah.
70%.
It's
Take
astronomical.
that money.
Yeah.
In a year, man, I could have made 130. Oh, coulda, woulda, shoulda. We all could do that. But
Yep.
when that kind of gain is there, dude, you gotta fucking take that.
Yeah, and you've always just used that approach their entire time investing, huh?
Yeah, yeah. And I could tell you a million stocks where, oh, if I'd have left it there, I would have made more. You know what I'm saying? Sure, sure. But there's also times where if I'd have left it there, I'd have got my ass, would have got my clock cleaned. You know what I'm
Yeah.
saying? Or I took it from there and yeah, I would have made more, but I moved it here
Yep.
and it made me 3 times that. So listen, investing's about what you're comfortable with, but I think when you make an aggressive move like an American Airlines and
Yep.
it pays off, you take that money and you put it in something a little bit safer because
Yeah.
you just won on a risky bet.
So I did a pretty small one like that, but it still worked. I went on American Eagle because obviously it's been closed, just like all the other stores at like 750. They released the earnings report, but for some reason it jumped to 1180. I went ahead and took that and threw it into Wells Fargo, which was down to like, around $28, pays a good dividend, $2, lower risk type of opportunity. It's also now up just because the overall market's up. And so
Right.
that, original, let's call it $7,500 because I bought 1,000 shares, went to like almost 12, then threw it into a dividend stock. And then now it's up about $5 a share, plus it pays. So that kind of motion was what I'm attempting to do with some of this stuff, that I can, hopefully get equity that'll grow, but also that, is kind of in that strategy that I like with the dividend payer. So that's kind of what I've been looking at, those type of strategies, Johnny.
Yeah, 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 100%. And I've made moves and I've been very open. Like the moves I've really went in on are the legalization of sports gambling outside of
Huge.
Las Vegas. And I've really gone in on those because I'm a believer that, well, there's facts to back this up, that it's recession proof.
Yeah.
And gambling is truly
They
recession.
created an ETF for that. Did you know that? I don't think it's out yet. It's called Betz, BETZ, and it's going to be Penn, Boyd, DraftKings, MGM, and I think one other. So
Yeah,
that's I
probably
see
Las
you.
Vegas stands,
Yeah,
which outside, like those are
all the ones you own, right?
yeah, yeah,
I don't know any of the
exactly.
Boyd. I don't know much about them, but if we look
But
at that, so we started talking about DraftKings on here. This is what will be interesting. We'll be able to go back
yeah,
and match up some of this content, John, because
absolutely
there was a lot. So you started talking about DraftKings at $22.
correct.
Now, whether it was on here or to me, I remember that. We spoke about it though, because I remember the day I bought it. We talked about it on this. I bought it at $28.50. And
Yeah,
today it's sitting at $39.80.
yeah,
And it's red today. It's been green, green, green,
Exactly.
green, 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 because people are
Exactly.
probably taking profits, right?
Right.
Penn, which we've talked about, Penn had a crazy. Penn went all the way down to $5 during the pandemic. If
Yeah.
you would have put as much money as you had at Penn at $5 today, it's 36.74.
I put a lot in just under 10.
Yeah, and I got in at 1750 at a decent amount. So it's like we're up, but there's a group of people that believed in, especially Barstool so much at $5. Man, they and I don't think so here, because they're creating an ETF over the gambling, doesn't that allow way more people to participate in these stocks, John? So there would even be those pricing would even be a little bit more secure, as long as obviously are able to do business.
Yeah, I'm not a big ETFs connect in my investing ethos with age.
Yeah,
Why go with the ETF when you can do your homework on what each company's doing and pick a winner in your mind? Sure, that diversify in your own way,
sure. Create your
but
own ETF, basically.
well, that's what exactly. That's what a portfolio is, right? Your
True.
portfolio is your ETF. My portfolio is my
Yep.
ETF.
True.
I'm gonna take higher risk in what I believe to be a better position. But yeah, ETFs to me are like, okay, I like the space. I'm not gonna really go all in on researching specific companies, so I'm just gonna grab the ETF.
Well,
Okay,
that's kind of my
I'm not.
point,
Yeah.
that older people, let's say, if they could, maybe they wouldn't participate in buying just DraftKings or buying just Penn, but they're like, I like the space. It's obviously hot. I'll grab the ETF, or like oil, for instance, right? Like the ETF XLE. It's like, do I want to own Exxon? Do I want to own Chevron? Or do I just want to be like, I know oil is on its way back up. I just want to be in oil. So I think that could help, those stocks, because those gaming stocks have been so volatile, which, I mean, it makes sense. And there's no sports yet. So when there's sports and the ETFs out, they could be really sexy, even from these prices, maybe.
Yeah, I mean, I think more than anything, with gaming, like gaming stocks are always going to be valuable just because of this country's, it's a vice. We have an
Yeah,
insatiable demand for it, but we have to understand that the law, just like legalized marijuana, the laws that when laws change, it opens up the floodgates for new revenue, and
true.
and that's what these companies were referring to. They are sitting there in the perfect position for walk up sports gambling facilities in states outside of Las Vegas.
It should be
Now, if
huge.
there's anybody out there that thinks that won't be a moneymaker,
Oh,
I'd love to hear your justification, because us that it's quite a moneymaker, and their position, that's their whole business model. They're positioned to do that, as well as daily fantasy sports, which is a
massive.
monster. And it's growing by the day. So when you think about fantasy sports, right, you used to have to wait, to till there was a season to get paid off, or to make, okay, $100 for your fantasy football team. It's over. Wait 18 weeks. But think about this: there's a basketball game, which is there's 82 of them. There's a baseball game, there's 162. You're only you're wagering essentially through daily fantasy on just the game. So the receiver, the house, as opposed to getting one season paid for one season, they're getting paid for 162 games. I'm sorry, 162 games
Imps.
times 16, because there's, I think, 32 teams.
Sure.
So I mean,
Dude.
I mean, it's a very promising
That's
space.
that's why you wonder, is DraftKings a stock that could be $250?
Listen,
You know what I mean?
I'm a bull.
I'm starting to wonder about that.
If you watch it, there's so much resistance, so it'll go up, and then it'll, have a little down day, and it'll get it. Dude, it's been on the market like 5 weeks,
Yeah, not that long.
and
It's doubled.
it is a bull, and
Yeah.
there's no reason when you look at it, when you look at it at $40.
I was gonna say, will you add at these positions too, Fosco?
What's that?
Will you add at these positions even
I've
on
been at
DraftKings?
I've been
Been
at
adding
it.
the whole time?
Absolutely.
My dude.
Yeah.
Love it. All right. Lastly, I want to talk about Dana real quick. So he was on actually Big Cat show the other day talking about Fight Island's 1,000,000% happening.
Yeah.
Like I love. We talked about Dana. We've both been around him. Like I love this fucking vision, bro. It is so fucking gangster, John, that he's just like, I'm going to buy a fucking island. I'm going to fucking put fights on it,
Yes.
even with or without the pandemic. Like, I just think he knows it's such a fucking G move of all time. It's like, I just fucking love it.
I love it. I love it for a lot of reasons. Same reasons you do. Number one for the hardcores out there, like I mentioned, Enter the Dragon is one of the greatest movies of all time. But basically, it is Fight Island. Bruce, it's Bruce
Yep.
Lee's most popular movie. All the baddest dudes in the world. They take this boat to this fucking island and they
I
fight.
need to
Right.
watch that again.
Oh, it's just a classic. So to me, when I heard Fight Island, first thing I thought is Enter the Dragon.
That's probably
But
where it came from. That's probably in his mind, right? Of course.
100%. And then when you go from there, the thing about Dana is outside of the appreciation I have for him not seeing any obstacles, right? The pandemic, what people are saying, like he sees it. And then when he sees it, here's why he's smart. The UFC has been way ahead of other organizations on medical testing for their athletes. They take unbelievable care of their athletes from a medical standpoint, and then also performance enhancing drugs.
Yep.
They have instituted what you have to go through to be an Olympic athlete to fight in the octagon. So they're so good at keeping people safe. They're amazing at it. So he knows he has that piece intact. He knows he can go to a sovereign land, right, an island, and he knows that his staff, which he has trained over the course of, since I don't know, 05 or 02,
Mm-hmm.
they can handle this. So it's
Yeah.
not a lot of people look at it and say that's reckless. It's
Not for
reckless.
him.
No, man. No. He knows what the fuck he's doing.
I mentioned it one time before, but I think it has good context to this. Like, I watched him lay it out, Johnny, and we just followed along. If you follow us around the world, you have athletes, which John used to secure all the time for our company, like in Sweden, or remember we had the dude in Germany, the real stacked dude who was left-handed, or not left, Dennis Seaver. Is that right?
Yeah.
Yeah.
Connor put him out of his misery.
Yeah, he did. But so
Yeah.
it's like we used to go in and get people in each country, sell products in those countries. Like Dana said, follow us around the world and you will have business in all of them. This dude just fucking gets it. And Fight Island is fucking awesome.
It is. It is awesome. And I'll say this again for anyone who thinks like, oh man, not having like the normal fan base. Try watching MMA without fans, and I promise you're going to love it more because you get to hear everything. You get to hear
That's true.
shit talking, you get to hear the punching, you get to hear the kicks, you get to hear like it's and fighting. There's so much of that going on that it's just it's a better production to view.
That's awesome. Hey Johnny, we got a short one today, so we're gonna get out of here. We'll just end it like this. Make sure you go to iTunes, check us out, leave us a review, and Johnny Fusco.
Gee,
can the podcast be stopped? The podcast can't be stopped. All right, hold on, Johnny.